Gold is trading today around $4,260 per ounce, having slipped from the 7-week high of roughly $4,300 reached earlier in the week. The retreat comes after a steady 4-day climb that pushed the metal to its highest level since late June. Despite the pullback, the price remains comfortably above the $4,300 level that analysts have identified as a pivotal support zone. This means that, while short-term momentum has weakened, the underlying bullish structure is still intact as long as gold holds above that mark. Traders are watching the $4,260–$4,280 area for signs of stabilization or further downside. The main driver behind the recent retreat is a resurgence in the US dollar, sparked by weaker-than-expected US private payrolls data that initially boosted gold but later gave way to a dollar rebound as investors reassessed the outlook for Federal Reserve policy. At the same time, geopolitical tensions in the Strait of Hormuz have increased demand for the dollar as a safe haven currency, exerting additional pressure on gold. Despite these headwinds, central banks continued to be net buyers, adding 51 tons of gold in June alone, which has helped to underpin the price and prevent a deeper decline. For retail investors, the current price action means that gold-backed ETFs and physical bullion holdings are seeing modest volatility but are not experiencing a sharp sell-off. The hold above $4,300 provides psychological reassurance that the metal's long-term upward trend may resume once dollar strength eases. Forex traders are noting that the dollar's uptick is making gold more expensive in other currencies, which could dampen demand from emerging market buyers. Meanwhile, equity markets are watching gold as a barometer of risk sentiment. A sustained break below $4,300 could signal rising risk-off behavior across asset classes. Looking ahead, the near-term trajectory will hinge on 3 factors. First, upcoming U.S. inflation data and Federal Reserve minutes could either reinforce dollar strength or revive expectations of rate cuts, directly affecting gold's appeal. Second, any escalation in Hormuz-related shipping disruptions would likely boost the dollar further, testing the $4,300 support. Third, continued central bank purchasing, especially if June's pace persists, could provide a floor that prevents a break below $4,000. Analysts currently see a range of $3,980 to $4,377 as the most probable band unless a surprise shock occurs. In summary, gold has retreated from its June peak but remains above a critical $4,300 support level, reflecting a tug-of-war between dollar strength and underlying safe haven demand. The move is largely driven by a temporary USD rebound tied to softer US jobs data and Hormuz-related risk flows, while central bank buying continues to lend underlying support. For investors, the message is clear: watch the $4,300 line closely, stay alert to US inflation cues and Middle East developments, and consider gold as a hedge that may regain momentum once dollar pressure eases.